Hello, good afternoon, and welcome to GFBC Insights, a special segment brought to you by the Ghana-France Business Club to create a dialogue around ongoing economic trends and potential opportunities in trade and investment in the Ghanaian and French economies. Today, we have the pleasure of interviewing Mr. Guillaume Arditti, founding partner of Belvedere Africa Partners, a financial and strategy advisory firm focused on Africa. So besides supporting the development of its clients' projects throughout the continent, BA Partners' purpose is to participate in the bridging of the African financing gap through the promotion of alternative financing solutions. Guillaume's career kicked off in South Africa with the French development agency AFD. He then joined major financial institutions such as Natixis and BNP Paribas, where he extensively focused on Africa, working on landmark transactions on the continent, leading business development initiatives, and as a managing director in BNP Paribas Energy and Commodities Department, focusing on strategy in Africa. So welcome, Guillaume, and thank you very much for joining us today.
Thank you very much, Maxime.
Okay, for our audience, could you kindly give us an overview of Belvedere Africa Partners and its activities?
Sure. Yes, Belvedere Africa Partners was founded in 2015. It's been supporting its customers into their deployment over the continent. So basically, we've been providing financial support services to project holders who are looking for financing. So we've been accompanying them in their financial strategy and their fundraising. And we've also been developing a second line of activity towards which we try to promote alternative investment solutions on the continent with innovative ways of financing different types of projects.
Okay, thank you very much, Guillaume, for the presentation. So Guillaume, you participated in one of our webinars last October, which was co-organized with the Ghana Investment Promotion Center. The theme was Ghana Beyond Aid, which is a strategic plan to overhaul the Ghanaian economy through structural economic transformation and shift Ghana's position as a lower middle income country to a middle income nation, self-reliant on its resources. So we had the pleasure of hosting you on the panel, as well as representatives from UBA Group, Adenia Partners, Annan Capital Partners, and the Ghana Infrastructure Investment Fund. So it was interesting to not only get a public and private sector perspective of the Ghana Beyond Aid vision, but an international one as well. So one of the key points that were brought up during the discussion was the need to unlock private capital and bridge the financing gap. We also interviewed Mr. Solomon Asamoah of the Ghana Infrastructure Investment Fund not too long ago, and he made an excellent point on the concept of Ghana Beyond Aid, its vision, and of course the long-term objectives. He also spoke on the misconception of Ghana Beyond Aid, which made headlines as a radical rejection of foreign aid, whereas Ghana is still open to fostering developmental partnerships with international actors in the private and public sectors. So the goal is to build capacity and to move towards self-reliance through the mobilization of our resources. Of course, to do this, efforts must be made domestically to increase investor confidence through reforms, best practices, and investing in the country through our own funds. Of course, we do not have to slow down these efforts despite the global pandemic. COVID-19 has obviously had a rippling effect on global economies and investment promotion. And in the last year, it has caused major economic upheaval, wiping out significant gains for both the public and private sector. So in your opinion, Guillaume, how will the COVID-19 pandemic affect the outlook of the international investment industry in 2021? Do you believe that it will disrupt financial flows to the continent?
Well, thank you, Maxine. First, let me tell you, it's a great pleasure to be for the second time on this series of webinars and interviews. Next, just wanted to also share the fact that we very much adhere to the Ghana Beyond Aid view, because what we understood from it, it's simply the use of all the tools that are available, and aid is just one part. And it's true that now countries like Ghana can definitely work on the full spectrum of financial tools which are available globally in the markets. So that's the vision we totally share and support at our level. Coming back to the COVID-19, I think it's closely related actually to the Ghana Beyond Aid vision, because counterintuitively, I think COVID-19 is having some sort of I think it is completely changing the perception from people who have not been able to work or who didn't have the opportunity to work on the continent in the previous years. So I think that what we're seeing now is first people who are very well surprised by what is happening, by the fact that the continent globally is showing a very strong resilience to the crisis, very far from the prophecies of dooms that we started hearing at the beginning of the crisis, with some people, announcing the millions of dead and the ultimate catastrophe. So of course the situation is very nuanced within the continent, but globally speaking, I think what is really coming to the eyes and the minds of the international community is that Africa has been doing surprisingly well.
I mean, yes, I mean, I do definitely agree.
Yes, and I think it is kind of it is not only the COVID-19; it's going to show a trend, which at least to my mind was initiated several years ago, where it's not the first time that we see a strong resilience in the continent, which was not seen before. By that, I mean, when we just speak about the COVID, of course, people also realize that a number of African countries, and especially in West Africa, had to face more severe crises with Ebola, for instance, which is far more lethal than the COVID. So people are now realizing that there was also a management capacity that was deployed at that time that is now quite useful on the continent, and that can inspire also a number of countries in Europe or in the US or in North America. And also, I think now people will tend to look a bit more at trends that only at what happens at just one time, right? It's the GDP for the next years are quite positive. So of course there is a dip now, which is caused by COVID, but what we anticipate is that probably by next year we'll see a very strong rebound. But that's not the first time. There was also after the crisis in 2008, of course there was a break in the economies, but then they started again. And then in 2014, when the 2015, when the oil prices crashed, people were also very much worried about what would happen in oil-producing countries. Actually, what happened is that, of course, the economies kind of stalled for 1 year. Nigeria entered into a recession in 2015, if I remember correctly. But then just the following year it was already recovering. So basically, what we see is that COVID crisis is probably going to deserve a name as a crisis, but not as a trigger for new lost decades as we saw them in the 80s and the 90s. So I think it's of course it's a very tough moment for everyone, but most probably I think that at least the perception of the African risk, as we call it in the financial space, is going really to change.
I mean, I do agree with you completely. I mean, concerning the changing perspective of the continent, of course, everyone was pleasantly surprised, how the continent had managed and also mitigated the pandemic. And I mean, some would say that to the point that it has made the continent even more attractive investment destination. And of course, it's enhanced its appeal. So why is it that despite the overall investment potential, there is still a financing gap?
I think you're very much right in the fact that it's going to increase its appeal. But again, we need to look at trends. So the financing gap is not a new thing in Africa. It can be explained, I would say, but there are two explanations on the offer side and on the demand. The growth story in Africa is now dating from the beginning of the 2000s. So there's been constantly increasing needs to finance infrastructure projects, manufacturing projects all over the continent. The truth is, some of them have been financed, so there remains, of course, a very strong financing gap for infrastructure, for instance. But nevertheless, some of the infrastructure have very much evolved in a number of countries.
Mm-hmm.
So on one side we had growth, and on the other side we have a financial system which is constrained. We have to look at it globally also. We don't have to look just at one segment of the financial system. So the financial system is composed by the local financial sectors, where you will find local banks and capital markets. Then you will see the DFI's world, and then the international banks.
Mm-hmm.
Eventually, there is the alternative financing solutions that we probably talk about a bit more later. So when you look at the domestic banks and the capital markets, generally speaking, face a lack of depth. Okay. So basically, you have the main ones are really, I would say, in Nigeria, in South Africa, obviously, in Kenya and Egypt. But although they're growing, they still lack depth and liquidity. Mm-hmm. The local banking sectors are also growing, but still face constraints in terms of the maturities they can extend to the borrowers. So usually, I would say after over 5 years, it starts to become a bit difficult. Over 7 years, it becomes increasingly difficult. Mm-hmm. And then in terms of lending conditions, there are a lot of countries where you will hardly find lending conditions below two digits figures. So all this brings constraint into the local financing sectors, which are progressively being overcome. But of course, it takes time to build a performing financial sector. Mm. Obviously, no need to say that there is very strong disparity in the different countries. Of course, you can't compare a South African market to some other markets which are far less sophisticated, or maybe Kenya or Nigeria. But I would say, generally speaking, the trend is there.
Okay.
Now, when you look at the DFIs have been doing, of course, a great job over the years, but there's so much that one sector can do by itself. Mm. So at the moment, what we're saying is that the DFIs have reached, can't finance everything in the continent. There are also a number of projects which are relatively small, and that need, pretty much tailor-made solutions, which can only be brought by, I would say, on-the-ground corporations or financial teams. Mm-hmm. And then, yes, the COVID crisis also has an effect on the DFI situation, as public debt is increasing. So there's been a lot of focus on supporting public debt in the countries, whether in Latin America or Africa, for instance. Mm-hmm. So it means that the private sector is going to be not left aside, but probably not as much favored as it would need to be right now, and this is a direct cause of the COVID.
Okay, so and
the third, sorry.
No, sorry. Please continue.
Then the third sector is really the international banks. Mm-hmm. International banks have tended to break their development in Africa. And not only on Africa, actually, I would say it's really on non-triple B countries. And this is also a direct result of the post-2008 crisis regulation evolution, which has caused prudential ratios to cause an increase in the capital consumption of the banks who are present in non-investment grade countries. Okay. All right. So basically, that's an objective factor that has kind of caused arbitraging positioning, whereby a number of banks who are present in non-investment grade countries have tended to to redirect and to redeploy their capacities in their more classical markets in the US or in Europe. Right.
No.
So basically, this is where we're standing at the moment. We have a financing gap which has increased because there is a constant growth on Africa, and at the same time on the financing offer there is a bit of a systemic constraint that needs to be overcome. So we are a bit at some kind of crossroad with this paradoxical situation where everybody has an agreement on the fact that there is potential and there is a need to deploy more funding in Africa, but at the same time there's been some drying in or at least some constraints in the financial offer.
Okay, thank you, Guillaume. I mean, you've just spoken extensively about the several elements that have influenced the financing gap in Africa, specifically trends. And I mean, you've as you know, working as long as you have in the industry, you've probably been observing the trends, as you rightly mentioned, since the early 2000s. But I mean, as we are moving towards a new, I wouldn't say a post-COVID era, what do you think are the hopes for post-COVID recovery, and of course narrowing this ever-growing financing gap?
I think maybe the COVID is going to trigger another trend, which would be very much in favor of bringing new financial flows to Africa. But basically, before even the COVID, for several years we've seen an accumulation of liquidity in international markets. So we've been seeing, because of the quantitative easing policies and the low yields that we've seen in the European and US market, there's been a mass of liquidities who are really having a hard time finding asset classes with decent yields, right? I mean, typically, if you want to be very conservative and have a capital preservation strategy in Europe, you will find maybe 0.5% or 100 basis points of yield. And that's bearing in mind that interest rates are still negative at the moment. So that was happening for already some years before the crisis. It really became quite sensitive 2 to 3 years before 2020, and now with the support of the economies, and again quantitative easing and all the debts, the sovereign debt, which is coming available to a number of countries in Europe and in the US, this is a trend which is going to be only accentuated. So we're expecting to see more liquidities in the market at a time where yields were already constrained and are still constrained. Okay. So I would say there's been a shift into mentalities which was starting before COVID, where a number of investors were starting to look outside of their borders, basically, because they were understanding that in order to find new yields, you would need to find either to increase your risk in your own markets or look at different geographies to diversify your risk, to find new type of project, new type of asset classes. So now, if you have this trend, this shift in mentalities that was already starting before the COVID, and then now you see that the first reaction of the people who are looking at the continent now is to be happily surprised by its resilience, then naturally it's putting forward a number of strategies that will favor the deployment of capital on the continent from international players.
Okay. I mean, it's good to hear that there's, of course, new financial flows that are flowing towards the continent. You've spoken of a new class of assets that definitely could be useful to the continent. I mean, one of the key objectives, actually, I wanted to bring this back to Ghana and see how this fits in within a Ghanaian context. One of the key objectives of financing Ghana Beyond Aid is unlocking private sector capital, as well as reforming the pensions, insurance, and securities industries in order to strengthen capital market development and also to increase the availability of equity capital and long-term debt instruments. So in what way can local African governments adapt domestic fiscal policy to accommodate and also attract alternative financial instruments, and also lift the limitations on investment vehicles domestically and expand the capacity abroad, including elsewhere on the continent.
Yes. Okay, let me first just give a bit of context on that, and then we'll come back more to the Ghanaian situation, which I think can really be at the forefront of financial innovation at the moment. Basically, if we look at the things a bit with a shortcut, what we've seen in terms of allocation strategies is that investors started to look at Africa, generally speaking, through a lens with it was quite binary. It's either aid on one side or it is high risk, high return on the other side. So I would say you would see development finance and private equity with targeted returns, which were quite high. Now, what is important is to show to the market that there is granularity in African countries as well. That there is granularity in terms of risk-return profiles, and that there is a middle ground whereby you can also work with middle risk, average returns, and in a conservative environment. So basically, this high yield, high risk one on one side, aid on the other side, and simply medium risk, medium returns in the middle. So in order to do that, countries like Ghana are effectively very well positioned because they have now a very long-standing track record in terms of political stability. And proof has been again made in 2020. Well, there was a bit of a wave of bad news in 2020, but the fact is that in Ghana, elections, and I think it's for the sixth or the seventh time, actually it's has reached a point where it's difficult to count now, went well. It's been several rotation in power. So my perception is that it cannot be considered as a transitioning country now. It is simply like a living democracy, which has a long-standing track record, and this is increasingly recognized also by the market. Economically speaking, Ghana has also been constantly improving for at least 10 years. Of course, there are some periods where things are going slower than at other times, like everywhere. But the trend and the trend remains positive and is positive for the future. So I would say Ghana has definitely an asset to be at the forefront for the private sector, showing that yes, you can invest in countries like Ghana with a risk perception which is simply going to be conservative, with conservative returns. The way it can somehow favor this shift into the perception for new investors, for people who until now were not used to work on the continent, is of course to reinforce the regulation so that it's possible for foreign investment vehicles to lend money to projects in the country without being too much constrained. Not controlled, right? I'm saying constrained. That's an important thing. It's like sometimes people tend to there is control, which is one thing which is necessary, and then there are constraints which can break the development of business. So that's two different things. And I really insist on the fact that I think control must be there, but then constraint must be reduced as much as possible. There is, for instance, an evolution which I think it can be a good inspiration for Ghana. Typically, when you look at local pension funds or insurance companies in countries like South Africa, Kenya, Namibia also, these countries were really the first one to make it possible for national investors, local investors, to become international investors all over the continent and outside also of the continent.
Okay.
So basically thinking two ways, not only like financial flows coming in, but also deploying outside of one's border and entering, I would say, a financial system which is a bit more global, more international, and that can create synergies also within the country.
Okay. No, I mean, thanks for mentioning that. Actually, Ghana has always been touted as a very attractive investment destination, mainly due to the fact that it's very stable. As you just mentioned, we had a very peaceful election season not too long ago. But of course, driving and unlocking private capital, in terms of promoting and driving investment to Ghana, no matter the source, be it domestic, continental, or international, is very key to adequately financing Ghana's infrastructure needs. But of course, the investment ecosystem needs to be appealing for private actors. So I don't know if you've seen this not too long ago, 2019, the Ghanaian financial banking sector recently underwent various reforms and adopted several fiscal policies, which resulted in the cleanup of the banking sector. So from your international perspective, is the development of the local capital market and fiscal policy reforms conducive for foreign investment?
Absolutely, because I think it is very reassuring. It is very reassuring that to see that the regulator is doing the job internally, and that things are working correctly. And if ever there is a problem, then corrective measures are taken. So that means it creates a macro environment which is very reassuring. It must be, some people would think that, okay, if ever there is a local banks are doing better, then we might face the competition effect from international players. I don't think it is the case. I think it's exactly the opposite. Is the more strong and solid is the local financial sector, the easier it will be to attract international investors, and who are going to work together, because at one stage there is a typology of transactions which cannot be handled by other players than local players, because you need a knowledge of the local economy with a level of detail that you cannot have as an international investor. And at the same time, sometimes you will have projects that you will need some additional financial capacity, because there are going to be very large projects, or because they are in sectors, for instance, where you would have some, I don't know, specific skills which can be found with specific people who work on whatever asset class. I don't know, for instance, you would think about commodities. There were some banks who are super specialized in commodities, so they would bring that type of skill. Then you would have some projects where you need several hundred of millions of dollars, or then you would need also to have cooperation with international players. So I think it's an extremely positive evolution, which definitely plays in favor of bringing new investors, and where I think eventually synergies will be deployed.
Will be deployed. Okay. Thank you very much, Guillaume. Actually, I'd like to move on to the actual topic of Ghana Beyond Aid. I mean, in order for the Ghana Beyond Aid vision to be sustainable, infrastructure development, manufacturing, and anchor industries are key to creating a self-reliant economy capable of creating jobs and promoting long-term economic growth and sustainable development. So within this context, in the context of Ghana Beyond Aid, where is the opportunity for international investors in the private sector, and what role can actors play in order to address the financing gap?
I think really the opportunity at the moment really lies into the development of alternative financial solutions. So really outside of what we've been mentioning at the moment.
Okay.
To my mind, one of the most adapted tools which have been left aside quite significantly in Africa is private debt. So basically, as we mentioned before, you see whatever domestic international banks, DFIs, capital markets, but when you look at the a lot of private equity funds also, but when you look at the private debt market, I think it's currently globally over $700 billion, and there is less than 2 billion in Africa. So that gives you a bit of an idea of the potential that could be deployed on the continent. It is mainly a market which is used in the US and in Europe, which is now also increasingly being used in Asia. So I think, yes, private debt would definitely be a good tool, because at the moment, our perception is that, globally speaking, it is more debt than equity which is needed. So that's, I would say, on the demand side. And on the offer side, for investors, that would be an asset class that could bring them this medium risk, medium return risk profile I was mentioning before, and that would bring this new type of asset class which until now has not been used on the continent. So that really goes back to the beginning of our discussion, is at the moment, now that the risk perception of the continent is changing, and that there is a need for international investors to allocate their liquidities on asset classes that would help them diversify the risk, geographically speaking, that would help stabilize their portfolio through, for instance, the exposure to the real economy, to real assets. Private debt would be a perfect tool to match both the requirements of the project holders in Africa and the requirements of international investors who are seeking to diversify their positions and protecting themselves against the high volatility we've been facing in the last years.
Okay, so I mean, you've pretty much answered my next question. I mean, at Belvedere Africa Partners, you've been quite vocal about private debt and how it's an underutilized financial instrument. Do you believe that private debt can be a viable financial vehicle adaptable to the Ghanaian investment ecosystem specifically? And what barriers and challenges must be overcome to accommodate private debt?
I think it would be particularly suited to Ghana, and that Ghana would also be very much at the forefront of the development of this asset class, because of the stability we've been discussing before. Because when you say to investors, okay, we are able to work in a conservative environment, the first thing you look, of course, is not the project you're going to finance, is the country. So it really starts with the country. So when you look at a country like Ghana, which is the most stable of the continent, then you already made a point. So I would say you can directly go look at the projects themselves. So you don't need to have some sort of worries about the macro stability of the country. So yes, I think Ghana would definitely be a perfect destination for first investment for international investors who would do their first transactions on the continent. And I think also Ghana could play a role in promoting and developing the asset class over the continent.
Okay. I mean, very, very good to know. Thank you, Guillaume. It's been quite an insightful exchange. Before I wrap up, I don't know if there's anything you'd like to add.
No, it's been a great pleasure to be invited again. So thank you very much for the welcoming. It's always great to share these views and ideas with the GFBC, and congratulations again for all the fantastic work you guys are doing for promoting the relationships between Ghana and France as well.
Thank you very much. I mean, so to conclude, the financing of the Ghana Beyond Aid initiative, as well as investment in viable sectors such as infrastructure, energy, manufacturing, and industry, is an opportunity for international actors to collaborate in building a better Ghana and a Ghana that we want. building up the resistance and resilience of local capital markets, investor confidence through best practices, compliance, and also meeting the international rules for financing will, in the long run, give local finance institutions the capacity to mobilize and unlock domestic private capital, eventually driving in a steady flow of international private capital to Ghana. So thank you again, Guillaume, for your perspective on private debt and alternative financial instruments. It's been very interesting to see how this fits into a Ghanaian and African context, and of course, within the context of the Ghana Beyond Aid narrative.
Thank you very much, Maxine.